Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking equities and E-mini S&Ps. Seeing a slight hiccup this morning. Some news out of China that perhaps they weren't going to be buyers of U.S. assets. Started things off on the negative. We saw equities go down and they quickly retraced. So we didn't go back into the positive. And if you look back, we haven't seen a down week in E-minis since Thanksgiving. And we've only seen 3 down weeks since the middle of September. So the trend is very strong, up 2.5% year to date, up 5% since the lows of December. So equities remain very strong. Despite the modest hiccup we saw today, technically the trend is still very much in place, and we continue to ascend at a rather rapid pace. And I think that with inflation data coming up, we've got the CPI, PPI later this week, also starting to get some of those bank earnings. Things may just slow a little bit. I don't necessarily say they're going to pull back. It may be slowing as we head into some pretty interesting news. And if you look at volatility, this morning we saw a rather large spike for the VIX index. If you blinked, you probably missed it. It quickly came back down. We're trading lower on the day, below 10. So still no fear in the market. We do see those moments of fear, but they're quick and they come and go very quickly. And we haven't seen a sustained period of high volatility. You pretty much wipe out 2017. You got to go back into 2016 near either the election or the Brexit area that we last saw any sustained level of high volatility in the equity markets. So low volatility still prevails. Trending higher equities still prevails. What does that mean moving forward? Well, the whisper talk today was the NAFTA effect and the U.S. potentially pulling out of NAFTA. At the end of this month, there is a key meeting in Montreal where not expected, but there are some rising odds that President Trump will pull the U.S. name out. I highly doubt that he pulls out of NAFTA. Renegotiating NAFTA may be something he does do because of the ties to supply chain management and autos and agriculture, and the fact that we've quadrupled trade with Mexico and Canada and making them our second and third largest trading partners makes NAFTA make sense. Just maybe not in the way it's written today. So you're looking at equities for a pullback on NAFTA. You're probably not going to see it. You're looking for a bid in the VIX index on NAFTA. You're probably not going to see it. I think that the market is too smart and too efficient to believe that whisper talk is going to alter the trend we've seen really going back since to 2009. That one agreement can do that, especially one that is probably just going to be renegotiated, not necessarily canceled. So equities still full steam ahead. Watch out, we have inflation numbers, and those bank earnings will set the tone for earnings season by the end of the week. This is Todd Colvin coming to you from the floor of the CME Group.